Hello friends and traders, let's quickly review one of the oscillators from Think or Swim, Sentiment Zone Oscillator. When it is put in use with context of value, we have 369 frequency vibes, and then we have 369 future market maker levels universal, which are the outer bands, and these bands, two of them, cyan color. What is really going on, which is driving the reactions in the market, are these levels. They are generated from the profiling phenomena, real supply demand, where billions flow. And what we do, we generate frequencies from the supply demand zones. And this is what you're looking at. The way to entice yourself to get and take a position in this is to look at the price has to be at these levels, magenta or cyan, and then look at the oscillation structure. So right here, market was going up. This is ES chart. As you can see, it was trapped here. Now look at this sentiment oscillator right here. All right, now market is coming down. Now we have one of the oscillation, which is right here. Then it went down further to the higher frequency zones right here. And then we have the same structure for this move. Right here. Look at the oscillations. So this is how you can get the price coming into it. Now this is a 1 hour chart. You may want to do some ES future option swing trading, or do some if you want to use future alone, you can do that as well. All right, so you got the idea. What are we up to? So that is how we're going to look at first, be at the right price spot, and then we are going to look at the oscillations as we do in the end. Now we know the trading system very well in 1 minute. Now we can look at trading. Now this one was a lot more exciting, because if you look at this market maker level, it was punched out to retest the prior 2-day prior levels. Market maker level, it did go to the tick, it cracked it. It was testing the low, because if you look back for last 1 week, this was the low. They pinpointedly to the tick stopped here, and since it is out of the boundary condition ranges for the market maker, these bounds, they brought it back in. All right. And this was a wonderful opportunity if you had taken a small loss also. I don't know why would you take it, because it went up 25 points, but here it is. Since you're doing swing trading, you can do add-on if you're doing options. And there it is. All right, let's try more. This one, obviously market is going up into these levels from this. And what we are doing here is we are touching the outer boundaries of MMM, which is market maker levels. And look at these sentiment zone oscillator, which is inbuilt in Think or Swim. And what do we get from this? Wonderful opportunity again. And here, same thing. So when you're punching in these levels, this is a low volatility zones, rotational algo zones, and this is actual big boys market maker level zone. So it is coming down in the lower end of it. But we are punching here, and look at this sentiment. There's also divergence going on, but this is where you want to get involved. If you want to get involved, make that call to your broker, and there it is. All right. This one is very interesting as well. We broke through this level, market maker level, and this is where the panic was setting in. China tariffs, most likely. And then what happened? Since you punched through this lower boundaries, projected boundaries, market came back eventually, right? A little later, but you had a great opportunity again to pick up this using the location. It went so far away. If you bought something here, remember we have to bring it together. If you bought it here, the buy was rejected by this. This one has to be down below these lines, green lines and red lines, or touch it at least. So somewhere here you'll buy it. Reversal trade. All right. No trade here, no trade anywhere. No trade, no trade. Remember, we're doing swing trading. We're not doing intraday trading. We can adjust that also. All right, here's another one. Boom, out of the bands, waiting for the levels to hit. And phenomenally, it also tried to do the same thing. It tried to bend over the market maker volatility bands as well. Perfect setup. And you see here, you will also get some divergences between these very spiky divergences. Great trade, and we hold it a couple of days. Now we are back into this outside zone. We are in our pricing levels. First one is here, right here. This is hourly chart. I will go down to a lower time frame. You can see this much clearly. Okay, same thing right here and right here. It gave you a chance. And this one did not do too much, but that's how trading is. All right. This is what we're after. Spiky moves into the levels, fast and furious. When there's right here, one good one. See that? Spiky moves, big moves, where they're gonna stop right here. That's what we're after. Here is a clear divergence trade getting into it. Now you can see this. Lower, but this was not quite there. So if you just took this trade, that's what the idea is, to take weekly's highs and lows possibly and hold it for next 3-4 days, and you double your money, as broker might suggest otherwise, to lock in your profits and do some hedges. All right, right here, same thing. We are at the level of the zone, level out of the zone. I need levels to be touched, so you have to be very strict with your trading. Very strict with your trading. It touched here, but no signal. All right. So if I need to always start with 1 hourly chart, because that will give you quite a bit of interface between higher time frames and lower time frames. So if you look at these trades, I can look more. Right here is one. I can just do it quickly. And then what are we going to do is measure them. Through a smart time frame. Okay. Oopsie. Excuse me, just 1 second. Let's get rid of this. What is this? Went bonkers. Alright, my friends, right here it is. It disappeared. Just going wherever it wants to go. We'll just remove it. Alright, I think we have taken enough examples. Alright, and then we can see how what we think it should be doing, it is doing. This is a huge divergence. Okay, I'm looking at when it touches this, where is my condition? The condition was here, never, we are not close to the price, so I'll reject it. I'll wait for the next, when it touches it, now I look back and say, okay, there is a huge divergence, and I think that's what I'm trying to explain. All right. Okay. There it is. So I think we covered most of the appropriate trades on the hourly basis. This is pretty obvious. Okay, and this is another one which took quite a beat, but like, remember, we are dealing with 3-4 days of options, so you can always add on. Now here is a divergence again. Same pattern shows up over and over and over. We can add on here. You can always do one MES options, and you can do two if it goes against you, if the divergence condition applies. Alright, here in the condition came rejected because we're not in the price. No price, no price, no price, no trade, even though it is hitting. Combination is not working for us, and I need some combination. This is the one which worked right here. So anybody can become a trader in a short while if they follow the rules. And if you want this system, and if you are cash constrained to invest in a professional hedge fund trading courses, you can start with some easy, breezy startup kit, functional, profitable kits. You can do the things the right way. Alright, so that is all I wanted to show you. Now let's move down to like 15 minutes. It doesn't matter. You wanted to see, because what happens is when you shift this to 15 minutes, it's going to recompute the frequency levels based on this time frame. Alright, and then there's quite a bit of control. We can add on how big you want this and that, but ultimately what is going on is, to start with, look at this market maker levels. Are we close to that level? There's a level very, very, very strong. Okay, and then it moves. This is 50-point move, right? $5 in SPY roughly. How about if you want to do NQ? Well, let's do NQ. But you got the idea. What is going on is we are using the pivots identified in real time, and then we are doing some frequency with the real supply and demand. NQ. Well, let's do YM. We always do NQ. Let's do YM. Oops, YM. Okay, is YM doing something different? No, because we are doing the same thing. Here, no level, but this is a stop loss. This one is a, now remember, this is normal level, these are extended levels. So you need to understand your instrument, where it is going to be more reactive in the normal versus extended levels. if you go to extended levels, you'll see a bigger move coming from there, like here. Most of these indices work in the same direction, unless there's a divergence, right? But see, getting out of the extended levels, and here expect a bigger move. Okay, how about if I go down to, like, 5 minutes? Now we're getting into market maker channel trading, which we had in previous videos as well. And let's do something different. Let's go back to NQ, for example, volatile one. All right. Market internal channels is like, the boundary conditions of the algos. Market should sustain here, up and down. It sustains the ranges unless you really take off. So now when you are at the bottom of the range, level is sitting there. Look at this divergence, it take off. Now this from here to here, let's see how many points are these actually. $100 points. All right, so that took 2 days to manifest. Oh, sorry, it took this 1 day only. Which day is this? Friday. So you got the idea what's going on. I'm just looking at the prices on the right side. It's moving from, it moves 250 to 350. 350 point is average move. ATR, you can check it out. But you can see how these levels, when they hit and the sentiment is set, you can take advantage of it. So what is the best use of it? I would say just don't go below. If you want to do swing trading, stay with 30, and that all we are looking for is the best levels to trade. I'm gonna just mark these levels for you. Okay. Extended levels are the best. Extended levels are the best. When you get in the extended levels, they're the best. When there is a encapsulation of these levels, like it does a lot in NQ like this, when they're clustered like these, perfect. Right here, clustered, right? So but the levels are there, they're pretty strong. If you want to use your own oscillator, definitely look into that. You have lots of oscillators for free out there, but first thing, you should be at the right price before you can make the move. You can just see it went even below that. So it is going to be useful for folks who are doing some hedging based technologies, where you want to really take a bias through the options first, and then we do some hedged trading on the opposite side. Or if you want to take, if you got this big moves 3-4 times a week, we want it to be really out of the external, the cyan color dots, leaving the bands, leaving the outer bands, and staying like here, outer bands, touching and leaving. That's what we need. All right, so this one is showing divergence. Good trade. 400 points. So you can get 400, 500 points if you do it properly and effectively. 400 points up, 300 points down. Okay. From here again 400 points. Here roughly 400 points. Here also 3. It's just doing its ATR moves. 350, 350, 350. Now this is a good one. Now I'm giving you another idea where the clusters are there for NQ, where you can look into this on the left side and say, hey, hold on a second, I'm getting divergence. So this divergence moves into the level, which is right here, extended level also. It's gonna work out decently, most likely, right? That's all the whole idea is. And if the trend is moving strongly, now you can always see this divergence again, retesting it. Look at this guy, right? At the level, trend is up, below this internal algo bands, below this, another 350 point moves. Now here, divergence into it, we already saw that. Or did we? I think it's the same pattern shows up, don't even know which I'm looking at, this or this. They are the same same patterns, right? All right, this one is a divergence from this pivot to this pivot into the level, and look at this weakness, same thing. Let me mark it. Divergence, right? Divergence. Look at these levels. In our levels, into our levels. All right. Now we get the bottom band. So I think you can just get all the swings, but how about this one? Well, this one was not showing us anything. Only thing I can see is we touched the, let me see, zoom in. If you can't see it, don't do it. Be in the extremes. For NQ, be at the extremes. It'll help you a lot. Like here, extreme, extreme, and the level and extreme. How about this guy? Look at this. Divergence. This keeps on showing non-stop. Now if you're trading futures, you know, you get stopped out. But again, we're 30-minute chart. We're not gonna trade this 30-minute chart. We're gonna be doing this 30-minute chart, 1 hour chart for options. You can buy NQ options, future options, and let it run. It's 8-year move. That's what this is designed to do. As you can see, it catches all the swings. So thank you, my friends and traders, for participating in this quick presentation.